Cavco Industries builds modular homes to order at about a 30% cost of a regular home. The CEO says the business model is serving them well against a tough housing backdrop. Bill Bohr is the CEO of Cavco. Bill, it's great to have you on. You're in Mississippi. Maybe you can bring some fresh air into this conversation and another tough market day. What's been driving your stock higher?
Yeah, I think it's the general need for housing in this country, and it's so much more needed at lower price points. And manufactured and factory built housing is really targeted right there where the affordability problem is at its worst. And so while you need to speak about the broad housing market in total, when you really segment it down, a lot of the dynamics that are affecting site builders really aren't the same factor in our segment of the market.
Well, is it true your average selling price in the fourth quarter was under $100,000? I mean, we're talking about a very different segment of the housing market than the traditional builders.
That's right. You've seen traditional builders really over a matter of decades continue to build larger and more expensive homes. They've got limited resources, and if they're going to apply those resources, they tend to go up. And we've gotten to the point with affordability where the median home price is really not a first-time buyer price anymore. And they're just not able to hit those prices. So that's a tremendous opportunity for factory-built housing, and one that we're kind of being the beneficiaries.
What parts of the country are you seeing kind of the most construction activity going on? And are you hamstrung at all by rising costs of, construction materials or labor issues?
Yeah, we cover the population of the country pretty completely with our 31 plants. And I would generally say that if you looked at the last year or so, we've seen an upward trajectory on orders in every region. Now, if we look at it very recently, the Southeast and really across the southern part of the United States is very strong. Florida is a little bit of an exception to that. Florida's been very slow the last couple of years. But generally across the South, the Sun Belt, it's been tremendous. And as we come out of the winter in the northern climates, we're hoping and expecting it'll be a pretty good spring selling season. So we expect there to be general strength with it, most pronounced in the South.
I'm surprised. We've heard from a number of big retailers, everyone from Walmart to maybe Dollar General on down. They've talked about consumers now starting to pull back somewhat. By the end of the month, they might be running out of funds. They don't have quite the discretionary spending that they might have a year or two ago. I'm surprised you wouldn't be seeing or at least worried or bracing for a similar impact, at least at the margin. But, the stock's full steam ahead, and it sounds like so is your order book.
Yeah, it is. And I'm not saying that those factors don't impact us. They clearly do. Consumer sentiment, certainly interest rates, those are all big drivers for our buyers. But we're in a situation now where really since 2008, this country is underbuilt. And so there's such a need. I mean, right now, the median price point, we've estimated that there's only about 35% of households in the country that can pay the median price point. And so we just happen to be where the need is the greatest. And folks are trying to figure out if they can afford the monthly payment. There's so many people there that need homes that really that underlying deficit of housing is driving the upward trajectory for us, despite some of the factors we're talking about.
Yeah, and I think most people would overlook your ability to fill a needed gap in the marketplace. Bill, thanks for joining us to weigh in. Hope to check back in soon.